Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. Equity valuations are screaming disconnect while crypto markets bleed from governance failures. The macro picture is equally fractured. The Buffett indicator has surged to a staggering 238%. This U.S. stock market cap to GDP ratio is now far exceeding the $31.8 trillion economy. It signals a historic valuation risk that defies traditional gravity. Investors are paying a premium for growth that may not materialize. Meanwhile, inflation is biting back harder than expected. U.S. price levels have topped 4% for the first time in 3 years. This surge has crushed Fed rate cut expectations. Consumer anxiety is now spiking to levels last seen in July 2022. The central bank is trapped between stubborn prices and slowing growth. On the macro front, GDP data masks the underlying strain. U.S. economic output grew 1.6% in Q1 2026. Yet rising fuel and goods prices are squeezing household budgets. Kevin Hassett cites a spending surge to justify the growth. But wealth distribution is heavily skewed toward corporate profits rather than wages. In related news, demand is softening across emerging markets. India Inc.'s profit to GDP ratio rose to 4.3% in FY26. This gain was driven almost entirely by BFSI giants. Underlying revenue growth for the broader market stagnated at just 7%. It highlights a bifurcation in global corporate health. The disconnect between profits and volume is widening. In the digital asset space, security remains a critical vulnerability. A $1.58 million exploit hit Token of Power, $TOP. An attacker seized governance control to drain a balancer V1 pool. It serves as a stark reminder of smart contract risks. As we look ahead, the market waits for clarity. There are no major economic calendar releases in the next 36 hours. Traders are digesting the inflation data and valuation metrics. The absence of new data allows the current narrative to solidify. Volatility may persist as positions adjust to the new reality. The gap between nominal growth and real purchasing power is the key theme. Corporate balance sheets look strong in India and the US. But consumer sentiment is deteriorating rapidly. The Buffett indicator suggests caution is warranted. High valuations require perfect execution to justify current prices. Any miss in earnings could trigger a sharp correction. The crypto exploit adds another layer of risk. It underscores the need for rigorous auditing in DeFi. Governance attacks are becoming more sophisticated. Investors must remain vigilant. The macro environment is shifting from easy money to hard choices. Rate cut odds have collapsed. The path forward is steep. Companies must prove their earnings quality. Consumers are feeling the pinch. The divergence between asset prices and economic reality is the defining feature of this cycle. Stay informed. Monitor inflation trends closely. Watch for signs of consumer fatigue. The market is pricing in a lot of optimism. Reality is setting in. That's your market briefing. Follow Rumour With AI for daily market intelligence.